Hello, this is Steve Schwartz coming to you from Market Traders University on Friday, July 24th. One of the platinum group's metal, palladium, is used extensively as an industrial catalyst and as a key component in the manufacturing of automotive catalytic converters. Palladium is also essential in the jewelry market, dentistry, watchmaking, and electrical conductivity. It's one of the three metals that serve as a great alloy to the gold market. In the auto catalyst industry, all palladium is currently a lower cost substitute for the more expensive alternative platinum. As this has been recorded, palladium sells at about 1/4 the price of platinum. It's about 1/4, actually 25% of the price of gold, and basically has had some great price moves that I think any market trader should look at. Now, we know the media doesn't cover it. We never hear about palladium, but it's one metal that, because of its alloy properties and its applications, industrial applications in the automotive industry particularly, it serves as a great barometer for economic recovery going forward. Let's take a look at the first chart. The first chart is a monthly chart. Basically, every one of those candlesticks you see is 1 month's period, and it dates all the way back to roughly 1999. So we're looking at a 10-year chart here, and you can see with disruptions in supplies, demand increasing, there was a short squeeze here. Easily you can see that this market has the potential of just really getting dislocated from its own fundamentals, but spiking and quadrupling in price in this case, only to come back down in a symmetrical bear market to stop in the 200 to 150 area. There's great value in this area to spike again and more than double, then correct over a year and a half period, only to take a 1-year trek to doubling again. Again, the market then settled down at 300, only to spike to 600. So in many cases, in actually 3 cases of the last 5 years, we have seen prices quickly double in intermediate trends that leave great opportunity for intermediate term investors and or speculators using leveraged derivatives. Well, today, if we take a look at the last 6 months, you can see a beautiful 45-degree angle on the monthly chart that essentially is showing a bottoming process. It's starting to move. It certainly does not look like it's too late to get aboard, and has still great value in this $200 to $250 range. I'm going to show you a closer look. This is a weekly chart, and it goes back to the last quarter of last year, fourth quarter 2008, and you can see this channel nicely moving higher. It's definitely showing I think, serving as a precursor to recession, that the worst is behind us. And when I say precursor to recession, I mean recovery, and the market looks like it's going to trek in a nice, steady bull market for now, that essentially is going to take itself probably into the next point of resistance, which is right here. Remember, this was support way back last year in September, before it went to 600. All support then becomes the next point of resistance. So if you take a look at this range and you just draw a line, an imaginary line here, you could see easily the market going to 320 from the 250 area, 260 area before any real correction to speak of. So there's plenty of room for a position trade for any investor. Take a closer look at the channel. Here is the 45-degree angle I was talking about earlier. This is on the daily chart dating back to March 09. This is actually based on the September futures contract to show you the derivative itself. You see a nice orderly bull market that's following this channel, and yet the media doesn't cover it. And that's what I like about it. Once the media starts giving you headlines, serious headlines on palladium, palladium could be $400 or $500 an ounce, and certainly you are going to be a happy camper and out of the trade. So my position is this: buy anywhere in this range, the 245 to 265 range. It looks like a great opportunity. My belief, just to go back to the old chart, my belief is that once everything catches up, money supply, inflation, economic growth and recovery starts picking up, there's going to be a manic condition in the markets, and very likely will move to this high and potentially take this high out on real dollar selling and maybe move back to these historical highs. I think that's a little far-fetched, but certainly the types of money and returns can be made here at these levels just seems to make a good sense to look at Palladium down here at these levels. Thanks very much. Have yourself a great day and hope this has been of help. May the best trades be yours in 2009.